So in this question, we're talking about the payback period approach. And how do we know that? Well, it says that the company's already calculated the expected payback period on this new machine that they purchased to be 5.2 years. So let's quickly talk about the formula and really what this approach means. So the formula is really not that difficult. It's just the initial investment and we divide by the annual cash flows. Now, there is no time value of money component of this. If it was, it would be called the discounted payback period approach. Now, what we get is a result that's measured in number of years, right? And this is the payback period. And the closest way that I can, explain this would be, say you lend money to your friend. The first question you want to ask is, when am I going to get paid back? Well, that is what this approach helps a company answer, right? So what we need to do in this question, because it's specifically asking about what amount did the company pay for the new machine. So we look at the formula, well, we're already given the payback period, it's 5.2 years, and then the annual cash flows, we need to calculate that, right? So that is going to be our step one. So when it comes to calculating annual cash flows, we'll have to consider the revenues and expenses. So it tells us that the revenues are $35,000 annually, and then they have expenses of $7,000. However, of that $7,000, $4,000 relates to depreciation expense, and there's no actual cash outflow for depreciation. So we can subtract $7,000 of operating expense, but then we're going to add back $4,000 for depreciation. So really, it's just a net cash outflow of $3,000 for expenses. So anyway, that gets us to annual cash flow of $32,000. Now, since they gave us the payback period, we're actually going to have to multiply that payback period of 5.2 years times annual cash flows of $32,000. And that tells us the initial investment was $166,400. So while you do need to know the formula, just make sure you understand how these three pieces of information are all related, because this is a perfect example of how they could ask for a different piece of information, and you need to know how to rework the formula a bit.